Now another, and this will be the last example I'll give you. The other category you can use is if you think that the market is going to move up off of a level, okay, and it's going to stay above that level. So this is where you'd want to place price or place your box very close to the current price and move it out in time. We'll put $50. Okay, now you can see here 37.05, 36.03, so about a 100 pip range, but we're going from July 15th all the way out to August 20th, and that's about the limit. In fact, let me try and move this out even more. There's the 21st. Let's just move it all the way out to the maximum. We'll let it compute itself. 148. See, the more time you give it, the more risk there is that price can trade above and then dip down and hit your box. So you can see, they're paying out more money because it's giving price more opportunity to fall inside of the box. Okay, now we'll just keep going here and see where. Okay, there we go. Box extends too far into the future. And I think it's about a little bit over a month that they're willing to give you. Yeah, okay. So there we go. You can see we've got about 100 pip range worth of price, but a little bit over a month worth of time that we're saying price is going to stay above 37.05. So they're willing to pay out $155. Now this is 2-to-1. Okay? 2-to-1 on your money. A little bit more. Because you're putting in 50 and you're profiting 105. Oops. 105.82. So 105.82 divided by $50 is 211%. If price stays above 37.05. So is it worth the risk, $50, to make 105? If we go up to 2,000, is it worth 2,000 to possibly make 6,200? Not if you got 2,000. Okay? The same rules apply. A conservative risk is 3%. So 0.03 divided by 2,000. Now let me get my calculator. 7. Okay, so that would mean you need to have about 67,000 in an account. Okay, but you have to realize that's a big bet. I mean, $2,000 is a lot of money to lose on one single trade. Okay, but you can see the difference. Okay, that's the dollar amount. So in dollar amounts, it's a lot more. Percentage-wise, it's still going to be about the same. So anyway, now you're kind of getting a handle on how to run these positions. Now, you remember, you're starting out this game account with over $100,000. So is it possible for you to take this kind of trade? Absolutely. Okay, is that less than 3%? You bet. Okay, so if you're risking 2,000, you can see here, because I've been messing around here, I've got less than 100,000. But is 2,000 a trade that I could take if I had $99,000 in my account? Yes. The question is not, however, this is a very important point, the question is not just, am I willing to take the trade because of the money I'm going to make? The question is still, do I think the trade is possible? Do I think that the euro is going to stay up over 37.05 until August 29th? That's the real question. And if the answer is yes, if I think it is, then it's a viable trade. If it's not, what do? Well, I lower the price some. You can see here, if I go down to 36.12, it cuts it in half. But look at the range, look at the breathing room I have now. Remember, the 36.12, the market's trading at 37.61. 37.61 minus 36.12, 149 pips. So as long as I think the euro is going to stay